Okay, let's have a look at the seventh adjustment for Lincoln 2019 company count question. So the company revalued land and buildings at 9,700 or 9,975,000 on the 1st of the 1st, 2018. So that's important because it's at the start of the year. So you won't be including any depreciation for this year in the revaluation reserve. The land element of the new build value was 150,000, so we need to use that figure to reduce the buildings down to get the depreciation for this year. The revaluation has not yet been included in the buildings or in the account. Buildings are to be depreciated rate of 2%. So there are a couple of things here. So first of all, your buildings. So the new figure for buildings are going to be 975,000, and that's going to be going to your fixed assets in your balance sheet. So that's fairly straightforward. You probably don't really need a working for that. The revaluation then is going to be the revalue figure less the cost of the buildings. So we need to find the difference. So 975,000, take away the cost to get the value of the increase. So 850,000. So 950,000, take away 850,000. So the increase is going to be 125,000. So the revalue, the increase is 125,000. So we need to include the cumulative depreciation, which is going to be land and buildings 55,000. So the revaluation reserve is going to be 180, and that then will go into your balance sheet in your finance by section. So finance by, so balance sheet, finance by. So that's your revaluation reserve. Now, if that was revalued at the end of the year, you'd also include the depreciation for this year for your buildings. But because it was revalued at the start, we don't include this year's depreciation in it. And the next working then is the depreciation of our buildings. So our buildings are now worth so the amount is going to be 975,000. We're going to take away land because land is not depreciated, and land is 150. So the value of our buildings is going to be 825,000. That figure is what's going to be used to calculate your depreciation for this year. So 825,000 multiply that by 2%. So 16,050. So that's going to go into your expense in your admin, and it's also going to go into your balance sheet in the finance or the fixed asset section where the accumulated profit is, or where the accumulated depreciation is. So that's both figures because we revalued at the start of the year. That 16,500 will now go into your balance sheet as part of your, so we'll see 975,000, that's the revalued figure, and this accumulated depreciation then figure of 16,500. And that's your adjustment then for working 8. So first of all, what we did was just put in the new value of our buildings. Don't need to have an adjustment there. Just remember that that's your new value. Then we revalued it, so we got the increase in the value, and we also brought the accumulated depreciation. We put two of them into your revaluation reserve. So a little bit like your question 2, when the disposal or depreciation of or disposal of land and buildings. So that'll be revaluation reserve in your balance sheet as finance by. And then the depreciation then for this year, because we revalued our buildings, 16,500 goes into your expense in your admin, and it also goes into your balance sheet as a fixed asset as well. And that's your adjustment completed.